What's up? It's Ron. If you get this wrong, you can miss out on life-changing gains. Today, I'm breaking down the difference between the Bitcoin bull run and alt season, so you know exactly when to go all in and when to take profits. Stick around also because later in this video, I'll share my exact strategy for timing altcoin season, down to the different phases that we should watch out for. If you've been watching my recent videos, you can recall that I said don't panic, that there's a lot of FUD and panic selling, and that we are still due for altcoin season. Market manipulation is also trying to shake you out, and recent news is causing even more people to feel sell pressure. Our goal is simple: find the best buy and sell opportunities to maximize profits. If you've followed my last few videos, you'd be way ahead of the game right now. You would have bought during that recent sell-off where Bitcoin dropped to about 79,000 and then rallied back up to around 90,000 plus. Right now, I think it's back down to about 82,000, so still a good buy opportunity for Bitcoin. In altcoins, look at XRP. It dropped to $1.90. Then it bounced back to $3. Same with Cardano, crashed to 50, 60 cents. Now back at $1. Actually, I think right now XRP's at $2.30 as of this video, and ADA is around 80 cents. Before we dive in, quick disclaimer: nothing in this video is financial advice. Always do your own research before investing your hard-earned money anywhere. Also, do me a favor, tap the like button to help push the video to more people who need to see this. It really helps the channel's growth. As a small content creator, it is super appreciated. The key to winning in crypto is having a solid plan, not just chasing green candles, not trying to time the tops, but most importantly, playing the cycles strategically, which we'll go over here now. Let's break it down. Let's talk about the Bitcoin bull run first. A Bitcoin bull run happens when Bitcoin's price starts climbing steadily, breaking past its key resistance levels, and then grabbing the attention of other investors. Now, when this is happening, excitement builds, media outlets start covering it, big institutions jump in, and everyday investors really rush to buy in. Remember, Bitcoin is the foundation of the crypto market. It has the highest market cap and the most liquidity, making it the go-to choice for big investors and traders. When new money flows into crypto, it usually enters through Bitcoin before spreading to altcoins. Bitcoin is like the gateway coin. There are phases to the Bitcoin bull run that we should pay attention to, and they go something like this. First, you have the accumulation phase. This is when investors, institutions, and hopefully you are buying Bitcoin at a lower price when the market is slow. This usually happens after a long bear market or a period of sideways movement. Then you have its breakout phase. Bitcoin starts breaking those key resistance levels, attracting more attention, and then media outlets pick up the story and retail investors begin to notice. Then you have this parabolic growth. Bitcoin's price skyrockets. Mainstream media goes wild and FOMO starts to kick in, driving even more buying pressure. This is when the biggest gains happen. Then you have the peak in distribution. Eventually, Bitcoin reaches its peak. You can see this in the regression band in the red. Experienced investors start to take profits while newer buyers keep rushing in. But soon a correction follows. Once Bitcoin had its big run, money often starts flowing into altcoins. This is when alt season begins. As Bitcoin peaks, dominance falls. That's when Ethereum and top altcoins start their runs. This happens every cycle. You may say, well, Ron, why is this important? Well, it's important to know what's happening in the macro scale so that you can make smart decisions within your portfolio so that you can maximize your gains in these different market conditions. So what if the Bitcoin bull run has peaked? Now what? Well, historically, alt season begins. Now, this period in the cryptocurrency market is when altcoins, which is any cryptocurrency other than Bitcoin, experience significant price appreciation. This phase usually follows that strong Bitcoin rally, which we just covered, and occurs when investors rotate their profits into smaller cap assets in search for a higher multiple. Several factors contribute to the explosive growth of altcoins during this period. First, Bitcoin dominance declines, and we have looked at the chart in many of the past videos, so I'll save you the time here, but Bitcoin dominance measures Bitcoin's share of the total crypto market cap. When Bitcoin dominance drops, it often signals that investors are shifting capital into altcoins. This is because altcoins have much smaller market caps compared to Bitcoin, making for some nice gains. While Bitcoin may increase some, altcoins can surge 10, 20x, or even 100x. This is why you want early entries in altcoins that I've mentioned before, like Near, XRP, ADA, Render, Solana, ETH, XLM, ICP, and many other alts that I've mentioned. Historically, ETH is among the first altcoin to rally when its alt season begins. Its movement often sets the tone for the broader altcoin market. Let's look at the different phases which we should look at when it comes to alt season. First, not altcoins rise simultaneously. Typically, alt season unfolds in the following sequence. Now, this is important, so I would not skip this. Phase 1, Ethereum gains momentum. As the second largest cryptocurrency, ETH is often the first altcoin that sees significant gains after Bitcoin stabilizes. We have seen this in the past over and over. Phase 2, large cap altcoins follow. Coins like Solana, XRP, Binance Coin, Cardano, they start beginning their upward movement. Phase 3, now the mid and low cap altcoins surge. In this stage, we see some of the highest returns. With these smaller projects, they'll experience even more parabolic moves. This is where you could find those 100x multiples. Remember in the previous video that I made, we talked about how we allocate about 15% to this. Then you have phase 4. Those are meme coins and speculative assets. Toward the peak of alt season, these like highly speculative assets like the meme coins can see huge price increases before the market corrects. These phases are crucial to understand because they help you recognize the right time to take profits. Knowing where you are in the market cycles is key to winning in crypto. History proves it. Altcoins that pump 10x, 50x, or even 100x almost always crashes 80 to 90%. If you don't take profits, the market will take them for you. So it's very important to take profit. The critical question is, how should we allocate our investments during different phases of the market cycle? Well, there is no one size fits all answer, but I'm offering a structured approach to optimize gains while managing risk. For me, it's pretty simple. I'm stacking Bitcoin no matter what cycle we're in. At least 30% of my portfolio stays in BTC. During panic selling, I might push it 50%. Now, as Bitcoin peaks, and you can look at the regression band that I showed earlier, I think the Bitcoin bull run could peak around 160 to 170,000 during this bull run. You can then rotate that into Ethereum and large cap altcoins as Bitcoin's price stabilizes. Ethereum and other top tier altcoins typically begin their upward trajectory at this point. This way, you have captured Bitcoin's profits during its rally, and now you can funnel those profits into large cap altcoins where you'll see a lot of liquidity enter with relatively lower risk compared to smaller cap projects. Also, to set ourselves up for success, diversification is key. Avoid concentrating too much capital in a single altcoin. Always secure profits periodically rather than waiting for the absolute peak because you don't know when that is. And you should always make price targets based on the indicators like Fibonacci, for example, and other important indicators. For profits that you make, you should reallocate them into stable assets like stablecoins or Bitcoin for long-term holding. We know that the cryptocurrency market is volatile. We are seeing it now, but it's also outperformed the S&P. That's just the game we're playing being in crypto. Another variable to watch is what the Feds are doing with rate cuts. One of the biggest external factors affecting the crypto markets right now is quantitative tightening. This is when the central banks reduce liquidity by raising interest rates and selling off assets. This slows down economic growth and makes risk assets like crypto more volatile. Rate cuts are coming, but when? March, July? We don't know. We can't control that. What we can control is how we position ourselves before that liquidity floods back into the market. Quantitative tightening means less liquidity, which equals less buying power. Once this ends, I think we'll see a huge surge back into crypto as we've seen in the past. Now, if you want to become a pro and really maximize your gains and protect your capital, I would recommend taking time to learn more about market sentiment and on-chain data because most traders only look at price action. Try to think deeper, maybe start to analyze Bitcoin dominance, which I've been showing you. Exchange reserves, this is how much Bitcoin and Ethereum are sitting in exchanges. When reserves drop, it means people are moving that crypto back into private wallets instead of selling it, which is a bullish sign. You can look at stablecoin supply and inflows. So when more USDT is being created and sent into exchanges, it means more money is entering crypto, which often leads to price pumps. And by tracking these metrics, you can anticipate market shifts before they even happen. You can also try using technical indicators so that you can have smart entries and exits. So price action alone isn't enough. You need indicators that confirm the trends and reversals. Here are some of my favorites, and I can make a video entirely on this if you like, just comment below. Fibonacci retracement, great for identifying support and resistance levels. Then you have the RSI, which is relative strength index. If RSI is above 70, an asset is overbought, potential reversal. If it's below 30, it's oversold. So it could be a buying opportunity. And then you want to look at moving averages, the 50 or the 200 MA. A bullish cross between the MAs are often signals of strong uptrends. And then remember to rebalance your portfolio and always take profit. It's tempting to hold everything to the top, but that's how most investors lose their gains and crash. Here's how to approach profit taking. Create sell strategies at key Fibonacci Fibonacci levels and major resistance zones. Reallocate those gains, those profits you've took, move them into Bitcoin or stable assets instead of holding onto overhyped coins. You do not want to do that. The ultimate move then is to keep a bear market bag ready. Every cycle, altcoins drop 80 to 90%. The goal is to have that capital ready to buy the bottom. When you combine these macro trends, knowing what phase you're in and market cycle you're in, you'll have a huge edge. So Bitcoin bull run versus altcoin season. The answer is both, but only at the right time. If you master this, you'll be ahead of 99% of investors. Drop a comment below. Are you more bullish on Bitcoin or altcoins right now? Let's talk in the comments. If you've gotten value from this, hit that like button, subscribe, and turn on notifications. You will not want to miss the next video. To all my early subscribers, shout out to you. You are the real MVP, and I'll see you next time.